is, do people need to be living in their new home by January 1st, or do they need to have secured a mortgage from you by January 1st?
Okay, that's a really good question. And we're still getting some clarity from lenders, but everything I've read and all the interpretations I've read is that as long as your contract is cemented before January the 1st, so you've made your offer, you've got an accepted offer, we've sent the deal in, there's a mortgage approval in place, and all that is done prior to January the 1st, I believe that you're okay.
So my clients who bought new builds with possession dates of spring can stop panicking.
Yes, I have several of those myself,
Yes.
Jen, out there in the marketplace now, and our understanding is because it would be irrational to think that all of these folks that made decisions, that all of a sudden they might not be able to afford these things and can't fulfill their contracts and be sued and all these other things.
And the chaos that they were trying to avoid would wind up.
Exactly. So no, if everything's in place, the approvals are done, and the financing has been approved, and everything is completed, and it's been prior to January 1st, my belief is everybody's fine.
Right. So the difference between a $500,000 home and a $400,000 home, let's talk about
that's
the
your
Orleans.
And that's your domain, really, in the real estate side, right?
The Orleans market specifically, I mean, you're looking at a change from a 2,500 to 2,700 square foot home in the Avalon area. 400 range, you're looking at closer to 1,800 to 1,900 square feet. So you can see the lifestyle difference that these sorts of rules are going to have an impact on your family.
I actually did a concrete example to share. So if somebody was buying a home and they needed a $300,000 mortgage, for example, today, if I was seeing them and they had their 20% down, they could get a 30-year amortization. That's allowed when you have the 20% down. Their payment today on that mortgage of $300,000 at 3% on a 30-year amortization would be $1,261 a month. Principal and interest.
Right.
That would be the payment that we would use in their qualification. After January the 1st, I have to use 5%.
Right.
The contract rate plus the 2%. The payment escalates from $1,261 to $1,601.
That's $400.
It is. Well, it's $339.27 increase.
My math teachers would tell you
it's
I was never very good.
It's okay. I used a calculator. So that $1,601 is now the payment I have to use to qualify them. And that's where the 20% purchasing power reduction comes into play because of that increase in the payment. Their real payment would be the $1,261.
They just need to be eligible.
But they have to be able to show financially that they can qualify using $1,601. And that's what's happening, and that's what's changing in the 20% down payment plus category as of January the 1st. That's already in place for the most part now for those less than 20% down. The shift is now everyone is essentially caught in this qualification criteria.
Okay. I have another question for you.
Okay.
So
that's what I'm here for.
My other question is, I was pleasantly surprised to see that I didn't have a reduced amount in first-time buyers this selling season the way that we all kind of anticipated might happen. What I did notice was that number stayed the same, but I did notice quite a significant increase in the number of condos I've sold this year. And I could say across the board, the increase in the number of condos. I would venture in saying that it's a pretty balanced market, which is substantial change from the last few years where I try to avoid eye contact with you if you asked me to sell your condo a few years ago. So things have shifted that way, and this year I couldn't really put two and two together, but are you seeing that maybe there was a parallel in terms of first-time buyers looking at certain types of properties now?
Absolutely. Absolutely. I mean, in May, the condo market fueled the entire real estate market in Ottawa in terms of sales. I think it was 441 condo units sold in the month of May. And I definitely see that because I would meet with first-time home buyers and go through this analysis and work with this qualifying rate of 4.89% that we had to use. And my conversation would be, Bob and Suzanne, unfortunately, you're not going to be able to get into that freehold townhome space, but you can afford to buy a $250,000 condo with said condo fee. So what a lot of first-time buyers basically, if they were motivated to be homeowners, they had to make the decision to become a homeowner, they had to go into the condo market. And that was really driven a lot by these rule changes. Absolutely, there's a correlation between the two.
Interesting.
And the folks that are first-time home buyers that did not have to do that, I also see a trend of where a lot of, if they haven't saved the down payment themselves, and that's hard for first-time home buyers to come up with the money, there was a lot more parent gifting or grandparent gifting or brother and sister gifting of down payment funds to help them get to a level where they might still be able to buy that freehold townhome.
Okay.
So there's absolutely a correlation, and that's part of the government's desire, is to have people buying homes that are truly in the wheelhouse of their affordability in the event rates went up, and not have us buying homes that are potentially well beyond our means because the rates happen to be at all-time lows in the marketplace.
Money is almost free.
Right, and so you're exactly right. There's a correlation there for sure.
That's pretty neat. Yeah. So I guess I would venture out and say that over the next few years, if you're looking for a type of property that's going to increase at a higher rate, condos might be something you want to start considering now.
That, and I also would, part of my message would also be, is if your desire is to be a homeowner and you want to get the maximum home that you can, and believe that you can afford to do so, I'm not one to say get out and push your purchasing date earlier than you want, but there is going to be a difference as of January 1st. So we've actually, as a company, gone out to our clients and said, look, if you need to refinance, start talking to us right now and get it done before January 1st. If you really are highly motivated to be a homeowner and you want to get that home of your dreams, get out and get going on that now.
Well, the numbers don't lie. You did the calculations to show a $100,000 difference with a $100,000 income family. One day being able to achieve the 500, the next day 400. Totally different types of properties. So you're gonna have to move faster if you're pregnant with triplets.
Get to Jen and start finding out what properties are out there, and hopefully there's one that meets your needs. And you might want to push the go button before January 1st, or at least recognize that if you don't, come January 1st, you may not get the home that you really want. You still might be able to buy a home, but it may not be that dream house that you really have in mind that you want to own.
That's the truth. So thank you so much for your time today.
My pleasure.
We'll be back soon with some more interesting information. If you have any real estate questions, give me a call, and any mortgage questions, renewals, new mortgages, refinancing, Leo is your man.
Thanks for listening, folks.
Bye.
Have a great day.